premium account market update for November 2017. An individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances, and realise that not all investments are appropriate for every individual. Presenter today, myself, Leon Hine, Managing Director of Investor Signals, have over 18 years of experience in the financial services industry and a current licensed securities and derivatives advisor. The format for today's presentation: we look at the macro update driving equities. We roll through the ASX top 50 with a focus on FY18, FY19 earnings. We look at the technical trends impacting the top 50 stocks, and we conclude with our summary of our portfolio allocations and Australian market outlook. The Investor Signals Premium Account Service is a model portfolio of ASX 50 stock. We utilise call options to enhance portfolio returns. We're very much focused around effective ownership around ex-dividend dates, generating above average cash flow from dividend and option premium, while seeking capital growth, and importantly, all in a strict investment mandate, and the assets remain in your name. If you'd like to know more about the service, please contact me, Leon, at investorsignals.com. Moving straight into a graph of the XJO, we can see here that the most recent algo signals during 2016 picked up the higher-low formation in the index. And whilst we don't have a present buy signal, the index has found support off this 56.30 level and rallied back up to take out the prior high from April earlier this year. From a valuation standpoint, our market trades on a reasonably fair PE, about 17 times earnings, a little over a 4% dividend yield, and underlying earnings growth is tracking somewhere sort of within that 5 to 7% range. Let's switch the watch list over to the ASX top 50. We'll go back to the charts and begin toggling through them, and let's have a look at what the algo signals are telling us. So the AGL trades at the moment about 16 times earnings on a 4.5% yield. We're looking for about 10% forward earnings growth in AGL. We recognise that the algo signal's got a buy here. We hold it in the model. We think that the likely direction for AGL is probably more sideways consolidation. So this is a stock where we own it at these levels, and we've sold a covered call over it. Aristocrat Leisure, probably getting near the top end of its valuation range at 23 times earnings and a 1.9% dividend yield. The market's looking for about 20% earnings growth out of Aristocrat, but it still sits in the model as a result of the buy signal we had here back at $20. Amcor, we continue to like this name. We recognise that at the recent AGM a week or two back, the CEO came out and made comment that he expects fairly flat earnings over the next 6 months. So the market didn't like that, and we saw the correction from 16 down to 15. But we're still of the view that over the next 2 to 3 years, Amcor can deliver about 5% annualised EPS growth, puts it on about 17 times earnings on a 4% dividend yield, but it's another one of those names. We hold it in the model based off the algo buy signal, but we think it's worth putting a covered call in place to enhance the returns on Amcor. AMP, this is in the model also at 14 times earnings and a 5.8% dividend yield. We last had a buy signal down here at around $4.90. The Australian banks, now, most of these banks, I'll just shift this back down to here to highlight that the algo buy signal triggered a long trade here. ANZ trades on about 12 times earnings and about a 5.5% dividend yield. Obviously, we're aware that the Aussie banks, based on what the CEOs are telling us, is that it's a tough environment for them to grow top-line revenue, and there's very much a focus on cost control. In the case of ANZ, as with most of the banks at the moment, we think if we're going to hold them in portfolios, you want to be selling tight covered calls given that restrained earning environment. APA, so we can see here the algo signals just flagged the lower high structure. So we had gone from a buy signal down here at sort of low 8 into a sell range at the moment. So I've just flagged that's where the resistance in APA sits. Just to put some numbers on APA, it trades on about a 5% dividend yield. ASX, we continue to like this name, albeit expensive, 24 times earnings, and now on less than a 4% dividend yield. So we last had an algo buy signal there at around $47. AZJ, so lower lows, lower highs. The concern here is the company's likely to cut its dividend, given they're paying out 100% of their earnings. The algo signals have done a good job here of flagging 525 resistance, and we're seeing price fall away there, and I've commented on that one on the blog. BHP, so this is in the model. We last had the algo buy signal around $22, pushing up towards the top end of the valuation range at the moment, 15 times earnings. And to put it from a dividend yield point of view, just under 4%. Bramble, so we've seen a little bit of positive commentary out of the company at the AGM regarding forward earnings growth, likely to come in around 3 to 5%. Stock's getting a little bit expensive though, 19 times earnings on a 3.2% dividend yield. We think it runs into resistance. We own it at lower levels, and we've sold covered calls over Brambles. CBA, we're just mindful here of the lower high structure. 14 times earnings, just over a 5% dividend yield, but I think maybe CBA runs into resistance around this sort of $81 level there. Computershare came out at the AGM and reaffirmed that they're expecting earnings to grow at about 10%. That includes the benefit of the share buyback that's going on, but at 21 times earnings and a 2.4% dividend yield, I think Computershare is just too expensive. CSL, this is in the model off the back of the recent algo buy signal, so we can see here throughout the higher-low structure, and then the most recent pullbacks triggered the buy signal. CSL growing earnings at around 15%, trading 32 times earnings on a 1.4% dividend yield, so it is getting expensive, and you may want to think about selling covered calls over it. Caltex, we like this name, 14 times earnings, 3.5% yield. We owned it at lower levels, and we've mostly delivered it at $34 under the recent call options. Fortescue there, not doing there at the moment. Goodman Group, just recognising higher low formation. As I've chatted about, Goodman's quite expensive for a property trust, 19 times earnings, 3.2% dividend yield. GPT, we like this name, is getting a little expensive though, 16 times earnings on 4.9% dividend yield, owning it and selling covered calls, driving 10 to 12% cash flow. Insurance Australia Group, in a lot of cases we hold this, well, it's in the model portfolio, in a lot of cases we hold in client portfolios at 19 times earnings and a 4% dividend yield. We think it's getting a little stretched up here though. From an earnings growth outlook, looking for about 7-8% earnings growth over the next 12 months. Incitec Pivot delivered a good earnings result coupled with a share buyback. The market was pleased about that. The stock at 19 times earnings and a 3% dividend yield. Forward earnings growth likely to be around 15%. James Hardie, so this stock's had been making lower lows here. Had been creating buy signals off the algo long side. And they're just being flagged that this low's taken out that low there and a rally back, and we're looking for the price to exhaust a little here. James Hardie's expensive at 29 times earnings on a 2.8% dividend yield. Lendlease is back on support here. 12 times earnings, 4% yield. Forward earnings growth likely to be around 5 to 8%. And we're just recognising the algo engine starting to flag a buy signal at that $16 support. We still remain a little bit cautious on the property plays at the moment. Mirvac Group, the last algo buy signal here at $2, and the stock's performed very well, continuing to make higher highs, higher lows. Likewise here with Medibank. The algo signal gave a buyback here around 270 and continuing to sort of push onto higher levels. But again, to put that in context, Medibank's now 20 times earnings on a 3.8% dividend yield, and we're only expecting about 5% earnings growth. So I think owning it is fine, but you need to be selling tight covered calls. We don't expect too much more in the way of capital growth. Macquarie Group sort of surprised the market with a better first half result than expected. The stock now trades on 14 times earnings and a 4.9% dividend yield. Macquarie's been fairly conservative with their earnings outlook, but at the moment the momentum seems to be to the upside there. NAB, we've got this as an algo buy signal here off this sort of $29 level. We saw the commentary out of the company with reducing staff numbers. Further $1.5 billion will be invested in technology over the coming years, and that sort of a combination end with the stock going ex-dividend saw it correct from $32 down to $30. These levels, buying and selling light covered calls is something that can be considered. In the case of Newcrest, we've seen lower lows and lower highs, and the algo signals flag these. We're just starting to see price now push up against the top end of that sort of resistance there, and it's probably a little bit early to tell whether price breaks above and begins to build support on top of that old resistance, and we're just watching that closely at the moment. Origin Energy, we continue to like this. We natural gas prices are pushing higher, supports Origin. Maybe it's the argument is it's getting a little bit expensive here at the moment. The dividend's probably not likely to be reinstated until 18 and 19, and the forward forecast based on those earnings would expect to see a yield of around 3 to 4%. We have sort of fair value for Origin between sort of this $8 to $9 range. So owning it near these levels and selling covered calls is probably the best way to play Origin. Orica not doing there at the moment. They disappointed at the recent earnings result, and we've seen the stock marked down considerably off the back of that. Oil Search, we can see the algo sell signals, and we're just seeing that stock under pressure a little bit at the moment. Qantas, after a buy signal here at 5, it pushed up to 6.50, and we're just seeing the price retrace. QBE Insurance, lower lows, lower highs, and we're just seeing it under pressure here at $11 of the recent algo sell signal. Ramsay Healthcare, the same thing. I've put the resistance in there. We've seen the low breakdown, take out the prior low, and we've got the algo sell signal. Ramsay came out and reaffirmed that they're likely to see earnings grow around that 8 to 10% range. We think that if we see another pullback in Ramsay back down to sort of the low 60s, it'll present a good buying opportunity, and we'll keep an eye out on that and comment on the blog when we see that. Rio, we had the buy signal here at around $55, $60. Rio's pushed much higher since then. 14 times earnings and roughly a 4% dividend yield. And Rio, as with BHP, continue to sit in the model portfolio, as does South 32 off the buy signal there at around $2.50. Centre Group, we have buy signals only displayed in Centre Group, but only looking for about 2 to 3% earnings growth. The stock's at 16 times earnings on a 5.3% dividend yield. Owning it here and selling tight covered calls makes it a good cash generator for portfolios. Sonic at the moment, we've got lower lows, and I've just flagged that resistance there at 475, and we're starting to see the stock roll over. Sonic Healthcare, we don't mind this name, but recognise that it is fairly expensive with only about 5 to 8% forward earnings growth, so 19 times earnings and a 3.7% dividend yield. Again, you need to be selling tight covered calls over Sonic. Santos, speculation around the takeover proposal from a conglomerate out of New York, and we're also looking for some pushback from the Hardie Group, the Chinese entity that has become a major shareholder in Santos. So there's speculation that we may see higher premiums paid for a takeover for Santos, but we've certainly seen the price push higher off the back of the, combined with obviously the recovery in energy prices. Suncorp, a little bit cautious here on this lower high formation, so we're thinking around $14. Suncorp runs into resistance. Sydney Airport, we had a buy signal down here at around $6.50. The stock's pushing up to $7.40. The recent international traffic numbers through Sydney look good. To put some details on Sydney, it trades now on about a 5.2% dividend yield. So again, our preference here is owning it, but going out and selling covered calls over it. Transurban, 10% sort of dividend growth, but that dividend yield's now compressed down to 4.5% as we start to see interest rates in the US, or expectation for future interest rates really priced into the market. These yield names are starting to get a little bit of support here at the moment. Telstra, as I've discussed previously, on current numbers, it's assuming 22 cents of dividends. It puts the stock on about a 6.3% yield. Treasury Wine, so the algo buy signal here at $12, and we've seen a continuation of this higher low structure. Now, Treasury Wines is one of the faster growing companies within the top 50. It trades on a fairly high P at 33 times earnings and a 2% yield, but delivering about 20% underlying earnings growth. Westpac, so probably the most recent algo buy signal across the banking stocks is Westpac. So this higher low formation at 31.94. So we have Westpac on about a 5.9% dividend yield, but again, forward earnings growth is fairly low, maybe only around 3%. So owning it here and selling covered calls, I think, is the best way to think about the banks. Wesfarmers, Forward earnings growth likely to be around 5%, puts the stock on about a 5.2% dividend yield. So in the and the most recent signal was a buyback here at around $40. So owning it and selling calls at around the 43.50 makes sense, I think. Westfield, we've seen Westfield rally following the retracement in US bond yields a little. But with the stock now recovering up to 4.25% dividend yield, forward earnings growth only likely to be about 3%. I think you want to be selling cover calls at around the 850 level and turning that 4% yield into sort of 10 or 12% cash flow. Woolworths, we're just recognising at the moment after breaking out, creating higher highs and higher lows, we've now just got our first sell signal in Woolworths at around $26. So we're keeping an eye on how price behaves around that level. Woodside Petroleum, we had a buy signal here. The stock's broken out, made a higher high, and we now sort of view this $30.90 or $31 level approximately as a buying opportunity for Woodside Petroleum. The recent sell-off from 33 down to 30 was as a result of Shell finalising their sell down of their equity stake in Woodside. And there we are back to the index. So just to look at what stocks we hold in the model, if we come across, click on the model portfolio, change it over to the ASX top 50. Let's sort first by percentage gains. So the best performing stocks in the model, we've got Aristocrat, Treasury, CSL, Origin. That gives you an idea of the names that are making higher highs and higher lows. Another way of sorting that, if we have a look at what are the most recent stocks added, so by days held, the least number of days, and we come across Amcor, Qantas, GPT, Sydney, Transurban, Woodside Petroleum, AGL. So you can see there the names that have most recently been added to the portfolio. So to access the charts in the model portfolio, please visit investorsignals.com and request a free trial from the top right corner of the website. If you'd like to know more about the premium account service, please contact me using the details on screen.